Man, I sure hope you guys are ready for a jam-packed week this week. We have a lot of companies set to report earnings, and if you thought last week was nuts, well, I guess it kind of was nuts, but this week's going to be another big week, and we're going to split this video up into two parts. In this video, we're going to break down 7 stocks, 7 companies, and in the next video, we're also going to break down 7, maybe 10, depending on how I'm feeling, guys. So we're going to break down the EPS estimates, revenue estimates, the charts, what I'm looking to do, all that good stuff. So if y'all find value, hit that like button. Make sure to subscribe. It's free. And you might as well follow me on X as well, guys, at Stas Talk Stocks. Link down below. And you might as well also get your free stocks for Moomoo, up to 16 stocks, each up to $2,000. And you get a free share of SoFi stock as well with at least a $100 deposit. So use that link down below or go to StasSurFest.com/Moomoo. We'll talk more about that later. And with that being said, guys, cheers. Let's dive right into the video. So we're not going to spend too much time on the indexes today, guys, which you all probably know if you caught my last video. I think we're getting a little oversold here. I could be wrong. Well, I'm not wrong. I mean, we are oversold, but we could be going down a little bit more in the meantime. Who knows? But at some point, I believe SPY, Triple Q, at some point in the short term here, we're due for some sort of relief rally, so I'm kind of watching out for that, heading into this week with all these companies set to report earnings. But go check out my previous video if you guys want to see a more in-depth technical breakdown on SPY, Triple Q. So in this video, we're going to focus on, again, these 7 companies. Number 1 being McDonald's. Let me pull it up and show you guys, ticker symbol MCD. If you didn't know the ticker symbol for McDonald's, I'm pretty sure everybody out there does know that. But either way, look, this company, this stock has been struggling. Back in the end of July, just about, 3 months ago, the stock was at $300 per share. And you guys can actually see this ascending triangle I had drawn out a couple months ago, which clearly did not play out. So let me actually clear the drawing set here, and I might as well get rid of that $300 alert. So we can see we went from $300 all the way down to $245, which is a pretty big drop for a company the magnitude, the size of McDonald's, in a pretty short amount of time. About a 17% drop there. Not quite yet in a bear market. It didn't fall to a bear market, but it was right on the cusp, guys, right there. And now recently we've started to rally over the past, 2-3 weeks from 245. Now we're at 255. All right. So they're set to report, I believe, on Tuesday or Monday. Let's see here, guys. Monday morning, they're set to report 7:30 a.m., so right before, and that's Central Standard Time, by the way. That's right before the markets open. So MCD set to report, and they're looking to do 283 in EPS versus the 268 from last year. So that's going to be up year over year, and sales will also be up. Projected here, $6.19 billion versus $5.69 billion expected. That would be up around 9% year over year. Not bad, guys. And I was actually looking at this as not a potential buy for me quite yet, but if it creeps down to the lower 200s, man, 220, 210, 230 even, I would consider buying a little bit of McDonald's. I haven't owned this stock in a couple of years, but I think on this dip here, it's opening up a decent opportunity, maybe even as a trade. Now that I'm looking at this 3-year chart, we can see we're clearly still holding an uptrend. We're at a higher low right now above the 180 SMA. Maybe this could be a nice bounce back play in the short term. Again, kind of as a trade. I'm looking at this for me, of course, guys, not for you. I'm thinking out loud here. Please do your own research. And if it slips even more, that's where I'm going to be looking at it for kind of a longer term play, as maybe I'm not going to say it's going to be undervalued if it gets to 200 or 220. It depends, valuation's very subjective, right? But I think it'll be a decent, I think the dividend yield would be about 3.5-4% at that point. That'd be pretty good. Starting yield for McDonald's as kind of a dividend play. So I'd be looking at it maybe for the long-term account in the lower 200s. But as of now, in the mid 200s, we're holding the uptrend. I'm looking at it more as a trade. Maybe after these earnings come out, we'll see, how the stock reacts. So McDonald's clearly is showing some support, kind of a bottoming out, if you will, over the past couple of weeks, and we'll see if that continues. post earnings. Pinterest, PINS, is another one set to report, I believe, on Tuesday or Monday. Let's see here, guys. Yeah, Monday morning. Yup, or Monday after the bell. Excuse me, guys. They're reporting. PINS, again, is Pinterest, and this stock has been all over the place. I mean, you guys can see it hit $20 back in May. Then it ran at $32 back in July. Now it's at 25, so it's pretty much in the mid-20s. And they're looking to do EPS of 20 cents versus the 11 cents from last year. Pretty good year over year there, guys. And for revenue, they're projected to do $743 million roughly versus the $666 million from last year. That would be up around 11.5% year over year. And this kind of reminds me of how the markets are looking technically. If we're looking at SPY, look at SPY here, guys. Again, pretty oversold, bottom of this channel. You guys can see it's the same thing pretty much on Pinterest. If I zoom in a bit here, we're oversold, bottom of this channel, and you could argue we're due for some sort of relief rally, especially if earnings are pretty strong on Monday. Time will tell, so keep your eyes on Pinterest. The next one is good old Caterpillar, ticker symbol CAT, which is honestly another one that's pretty beaten down. It was at 293 back in the beginning of August. Now it's at 238. It's down about, let's see, 20% almost, pretty much in a bear market. So this is very oversold heading into earnings, pretty beaten down. I mean, more than that. Geez, guys, in the past couple of days alone, it's down about $35 per share. So they're set to report, I believe, on Tuesday. Let's see. Yeah, Tuesday in the morning, the 31st of October, last day of October. And this one's pretty, again, beaten down. Let me actually show you the channel here. Yeah, I mean, this thing is, way extended under this channel. So we could be due for a snapback if earnings are strong. They're looking to do 476 EPS versus 395 from last year. So that's going to be up. And revenue, 16.59 billion or 53 billion, excuse me, versus 14.99 billion from last year. That would be up a little bit over 10% year over year. Not too bad there, guys. So keep your eyes on CAT. Very beaten down. AMD is another one that I'm looking at for this upcoming week, guys. They're a pretty interesting company, that's for sure. Their stock's down about $35-40 over the past couple of months, about 28% in the red. That's a bear market. And this is also in this downwards channel. You guys can see if I clear the set and get this channel tool out to show you guys, we're still in this downwards channel. Pretty much clear as day, and we're more towards the bottom of it. So AMD is set to report, it looks like, here on, what day is this, guys? I believe they're on Wednesday. Let me double check. No, Tuesday, same day as Caterpillar, the 31st. After the bell, they're set to report. So they're looking to do 64 cents versus 67 cents from last year. So EPS is looking to shrink year over year, and it looks like revenue, 5.37 billion this year versus 5.62 last year. So that's going to be down 4.4% year over year. So pretty flat quarter year over year, at least, for AMD coming up here projected. So keep your eyes on it. Pretty beaten down, bottom of this channel. Maybe if they surprise, guidance is bright. Who knows? We could get a bit of a snapback there. ABNB, which is an interesting one here, guys. Airbnb. This one's up this week as well, I believe on the 31st. Let me double check and see what day that is. Nope, 1st of November, which is on, that's Wednesday, right? So this stock's down about $40 from the recent highs, or about 26%. In other words, in a bear market. And they're looking to do EPS of $1.96 versus $1.79 from last year. All right, not bad year over year. And revenue, $3.18 billion versus $2.84 billion from last year. That's going to be up 12% roughly year over year. Pretty interesting, guys. Let me actually pull up and clear the drawing set first of all. But let me pull up some of these longer term time frames here. So 1 year chart looks interesting. 3-year chart, oof, it looks rough for the bulls rather. That's for sure. But going back to that yearly chart, looks like we could pull up this channel tool and show you this. We're still technically holding an uptrend, are we not? You guys can see we're towards the bottom of the channel right now. So this is actually the moment of truth for the bulls. If we slip under 115, 110, especially under 100, it could get worse in the short term. But as of now, that's kind of what we're looking at technically on ABNB. And of course, it's very beaten down on the 4-hour chart as well over the past couple of months here, really the past month and a half. So what are your thoughts on Airbnb? I mean, fundamentally, they could be deteriorating a little bit. I mean, What do you guys think? There was a point where Airbnbs, they were the hottest things around like 10 years ago, whenever that was. They were way better than hotels, way cheaper. But now the fees are catching up, man. And looking at it from a consumer's perspective, I just was in Italy, right, with my wife for our honeymoon. We had 5 Airbnbs that we stayed at, and I was like, for 2 or 3 of them, I was like, man, I wish I had a hotel. And usually like 5 or 6 or 7 years ago when we were, going on vacation, getting Airbnbs were way better. I never regretted doing Airbnbs 5, 6, 7 years ago. But now I'm like, wait a second. It's like the same price almost, depending on where we're at. And 2 or 3 of the Airbnbs, I mean, this is just my experience, all right? It might not be anybody else's, but I doubt that. I'm pretty sure some of you guys probably went through this as well. But we were in Italy, and 2 or 3 of the Airbnbs, you know how you pay that cleaning fee. It's like $100 or whatever, depending on what place you stay at, how much it costs, how many nights, whatever. But there's a cleaning fee, and for me, it was pretty much over $100 for all the stays that we were at. It's a percentage or whatever of the total cost, whatever it may be, and it's a cleaning fee. So of course you're not supposed to leave the place a complete slob. All right, you want to make the bed a little bit, put the trash in the trash can, whatever. And we did all that, but I mean, these Airbnbs are like, you didn't leave the house. They're messaging me after or whatever, and they're like, you didn't leave the house perfect the way it was, I mean, they didn't say perfect the way it was, and it's not like we left the house a slob or a mess, guys. I'm telling you. So in other words, it's like they expect you to clean it perfectly, right? And you pay a cleaning fee, and the maid or the cleaning lady comes right afterwards, right? I mean, all the Airbnbs, once we checked out, the cleaning lady came. So I figured, all right, we don't have to throw out everything and clean up everything perfectly because we're paying this fee. But then they get mad at you, the hosts. I mean, I don't know. Maybe it's just an Italy thing. I have no idea. But listen, man, if you're paying a fee like that, I'm expecting to not have to do literally everything. I think one of the Airbnbs wanted us to take out the trash to the dumpster, which was like 2 or 3 blocks down the road. And I was like, I'm not doing this. We have all these suitcases. We're checking out. We're trying to catch our train. And this is a little side tangent, guys. But, I mean, I think Airbnb has gone down. Maybe it's just in certain locations. I have no idea, but it's not what it used to be. Will that fundamentally, show in the fundamentals? Probably. I don't know, whenever that does happen, but at this point, it's not what it used to be, at least in my opinion, but that doesn't mean the stock can't do well in the short term, and that's just my experience. I mean, what do you guys think? Let me know in the comments down below, but that's Airbnb. Etsy's another one worth looking at here. We have earnings coming up this week, I believe on Wednesday or Thursday. Looks like Wednesday, the 1st of November after the bell. So Etsy's looking to do 51 cents EPS versus the loss of 762 from last year. Holy crap, guys. And revenue of 641 million versus 564 million from last year. That'd be up around 13%. But be careful with Etsy, guys. This thing is not showing any signs of a reversal. Clearly in a downtrend. It's been like that for months, but keep your eyes on that one. And Mercado Libre, the last one of this video, guys, which, by the way, there's a part 2, so make sure to subscribe, hit that like button. The part 2 will be coming out pretty soon here, maybe later on today, tomorrow, depending on when you're watching this video. But Mercado Libre, they're looking to do EPS of 586 versus 256 from last year, guys. Man, that's a double up and some. And we can see revenue 3.57 billion versus 2.69 billion from last year, up 32%. Year over year is the projection for Mercado Libre. Very, very good. And this one's still holding an uptrend, right? Clearly on the 4-hour chart. And the stock's down about $250 in the past couple of weeks, or about 17% heading into these earnings. So this could end up being an opportunity, maybe arguably a dip buy. Earnings are on Wednesday after the bell. So let me show you this 3-year chart. It looks like we're starting to climb out of this downtrend. We're about to get a golden cross on the 3-year chart, which is great. The yearly chart looks pretty good. So keep your eyes on the dip on Mercado Libre. Bulls are still in charge overall on the larger time frames, and we'll see if that continues moving forward. So what do you guys think? Let me know your thoughts in the comments. And before you click off the video, don't forget to get up to 16 stocks for Moomoo, the sponsor of today's video. Use that link down below, or just go to stocksurfest.com/Moomoo. Once you open up your account and fund it with your initial $100 deposit, you get 5 stocks right off the bat, and you get a free share of SoFi stock as well. And by the way, each of those could be valued up to $2,000, guys. And to make things even better, fund your account at least $1,000 on top of those 6 stocks. You get 10 more stocks, totaling 16 stocks. So use that link down below, guys. Get your money. And with that being said, cheers. I'll catch you all later.